But let's get on board now. The MD and CEO of Marico, Saugata Gupta, who's joining us now. We had the results come out for Marico, and the results were healthy. Q4 by Marico, the PAT was up 8%, and also we saw robust volume growth that aided the performance. But for now, Mr. Saugata is joining us. Hi, Saugata. Thank you so much for joining us today. Saugata, Q4 has been decent for you with a 7% volume growth, which is at a 14-quarter high. Now, this outperformance performed most of your peers despite the input cost inflation. What are the factors that contributed to this performance, and what's your outlook for demand, domestic volume growth going ahead?
So if you look at the last year, we have been consistently, sequentially improving the volume growth trajectory. So the full year volume growth was around 5%. We exited at 7%. A significant portion of the growth has happened because our core has been steady, while we have been able to drive accelerated the diversification journey from foods and digital brands. And we expect that this kind of a 6 to 7% volume growth will be able to maintain as we go into this year.
Thank you, Mr. Saugata. This is Kanishka also joining in. Let's also talk about Parachute now. The segment has recorded 1% volume degrowth. Now, Saffola edible oils too saw a marginal drop in volume growth. Now, what is leading to this kind of pressure? Is it the price hikes that you have taken, or is it the demand slowdown based on the problem, if at all? How do you plan to revive this volume growth in Parachute and their value-added hair oils?
There are three parts to the core. First is, as far as Parachute is concerned, I think we had to do some MLH reduction in price point packs so that the actual transaction growth has been positive. The volume growth has been negative because of the MLH drop, and we expect that as copra moves into from hyperinflation to inflationary zone sometime in Q2, we expect Parachute volumes to recover. We are already seeing the first signs of challenges being faced by some of the smaller and marginal players as far as supply chain is concerned and ability to supply with this current very high rates prevailing in the market. And therefore, we expect as we move towards Q2 and beyond, Parachute volume growths will recover. And we will also anniversarize the MLH drop as we move to the second half. I think Saffola is something which we have taken a conscious call is to operate at a threshold level of profitability. As long as profitability happens, a threshold level, and we deliver value growth, we are not so concerned about volume growth. Having said that, I think we should be able to deliver low single digit volume growth this year. Value-added hair oils has made a significant recovery. We were declining in the in Q1 and Q2, sometime in Q2, Q3 and now in Q4 we have turned positive. We are extremely confident that we will be continuing to improve the trajectory of value-added hair oil, and that is where we are focusing on the mid and premium segment, which has higher margins. So this mix improvement will also help in cushioning our input cost increase on our core and helping in our margin endeavor as we go towards the subsequent quarters.
Right. Also, copra and edible oil prices continue to remain rather elevated. What is the outlook on the raw material pricing, and how can we expect that to weigh in on the margins going ahead? Now, when will you reach that guided 20% margins by?
We believe that copra will start softening in Q2, and therefore we should be able to recover some of the margins. There would be margin pressure in the first Q1 and Q2. But it will start softening thereafter. Secondly, I think we have taken a conscious call of ensuring, that we will not, dilute our A&P spends, because A&P spends are extremely critical to secure not only short-term growth, but the long-term growth and equity of the brands. Having said that, I think we have as you know, we have a very institutionalized, very high sophisticated cost management program in place. In spite of the fact that our input cost increase is one of the highest in the sector, we have continued to deliver, bottom line growth, even while investing behind in A&P, and therefore we are confident that by the second half, the margins will start, margins will start recovering. And therefore, we are striving to deliver double-digit, operating profit growth this year.
All right, Mr. Gupta, well, let's also talk about prices. Now, do you see any additional price actions going forward in the coming quarters, or do you think the price hikes have peaked for now?
We just recently took a parachute price increase in parachute. With that, we have taken a 30% almost increase in parachute pricing. The parachute, the copra prices have peaked. There is no reason to take any more pricing action this year.
Right. You've also reiterated your double-digit operating profit growth in FY26, and you say that there will be no price hike. So, what gives you that confidence despite the input cost pressure?
As I said that the input costs have peaked. It will just now start sliding down from here. And as far as Saffola is concerned, as I said, we will continue to focus on operating at a threshold level of margin. There will be significant improvement through mix, which is both the digital business and the food business, which is a diversified and a high growth business, continue to improve their margins. And the very fact that we see a higher growth in value-added hair oils, which and especially the mid and the premium segment, which has higher margin. So some of these margin, recovery will also happen through the mix and the fact that the diversified part of the business will continue to grow at a higher clip will also, the improvement of the margin of that part of the business.
Right, Mr. Gupta. I also want to understand what's your medium-term outlook for international growth. Can the 15% constant currency trend be sustained given Marico's exposure to external markets? And has everything that's been and also about everything that's been happening on the tariff front. Now, can we expect to see any impact in the first quarter of FY26, those numbers and beyond due to the tariffs?
No, I think consumer goods we operate. Tariffs are not going to impact our international business unless there is any black swan or significant economic, impact in any of the countries we operate. We are fairly confident in terms of, we've started to, in the last 3-4 years, two things. One is ensuring all our markets we continue to be in a high growth phase as well as having high margins. We have reduced our dependence on Bangladesh and also in our portfolio reduced our dependence on coconut oil across. And as you know, the diversified part of the business, which is the premium personal care, is growing at a significant clip. So I think overall we are subject to no significant black swan. We are pretty confident of delivering double-digit constant currency growth in the international business this year.
Right. So, Saugata, you also mentioned scouting for inorganic opportunities. Are you targeting any specific geographies or product adjacencies? Any new acquisition on the cards?
Nothing I can talk about at this stage.
Right. On that note, Saugata, we will let you go. Thank you so much for taking the time out and joining us today. And we'll move on then now to another counter that is in focus today that's trading under pressure, and that's